Good evening, everyone. This is your host, Aaron Yoon, coming at you from New York City. Welcome to another episode of YouTube Trading Vlog, day trading, and we're adding swing trading into the mix now. And today's a really, really good example of that. You can tell by the title that we actually had some profit. So we actually turned things around from yesterday a little bit, and it didn't. We did not quite break even yet. But the first thing I want to start off with, before we get into a multitude of trades, very, very active trading day today, very different from yesterday. I was able to spend a lot more time in front of the screen today, and I don't know if that was a good thing or a bad thing, because sometimes it can go really either way. But there was the first thing I want to talk to you about today is how to manage day trades versus swing trades, because I'm finding it that I need to be very, very selective. The other thing is how to determine and how not to get too excited by seeing bigger swings in profit and in realized and unrealized gains. Let's just put it that way. All right. So there's two main things to talk about today. So one of the things that I'm going to do now, then this hasn't really been applicable until I guess today. One thing that I'm going to be doing is, and I don't know if I'm going to do this all the time. I'm just going to do it as it's necessary. So let's take a look at my current status. So this is a screenshot that I took of my current, as of, you can see this was a screenshot taken as of 5:03 p.m. a few minutes ago. And this is what it is now, because the market's closed right now. Right now it's 5:20 Eastern, market is not open. This is my current situation. I have realized $222 in profit. And 35 cents. And that's a result of some wins and some losses, actually. And I have an unrealized $465 pending. And this is the kind of thing that, as a swing trader, you're just gonna, it's just part of the game, right? I'm carrying profit over into the next day. And if so, this is a kind of, if this is beyond your risk tolerance, you're like, I can't handle unknowns and pending profit and everything like that overnight, then I think you're going to end up missing out on some bigger moves. I think the bigger moves, and there is a better risk reward ratio to be had in swing trading. It definitely can be done in day trading as well, but the probability is greater if you can handle the risk of letting things fluctuate. You're gonna have some profit, you're gonna give some back, have some profit, give some back, maybe even get stopped out, and maybe even get stopped out for a loss, maybe even give up hundreds of dollars in wins for a loss. That's the kind of temperament, and that's the kind of personality of swing trading, and that's something that you might need to mentally and emotionally develop that kind of endurance before it's possible to stick to your trading plan. So I think that's one of the reasons why people gravitate towards day trading, is because it's an easier fix. And for me, it was kind of the opposite. For me, I learned swing trading first. I was trained more along the lines of the traditional long-term hedge fund, like investing kind of risk palette. And this is something that as a swing trader, even swing trading felt like I was trading very, very frequently. So day trading is something that I was like, oh my god, that's just too much volume. And for me, day trading is what had me stretch my comfort zone and actually provide me content for this blog for all of you right here. right? So I'm dedicated to doing certain kinds of day trades. Unfortunately, today they didn't really pan out too well. I mean, like it was just. I'll go through them in a second, but as you can see, I have a ton of positions open that is going into the overnight. A ton of positions open that is that when the market opens again at 6, who knows what can happen, and that can really be nerve-wracking for some people. But for me, it's something that I'm okay with. That's one of those things that I've been okay with for a while. So I'm looking at the big win is in the euro dollar. I actually also had a position on the pound that got stopped out for a profit because I moved my stop up, and I'll talk about that in a sec. I also got stopped out on a crude oil position for a break even because I saw that the trend was going against me. So there's a lot to talk about. So let's get right into it. I just wanted to give you an idea of what I realized and what I'm carrying over into the next day. And tomorrow, who knows what's going to happen, right? We really don't know. So let's just go down the list here. It's pretty much, I messed around with pretty much everything today. Lots of activity here. On the NASDAQ, I think I actually got stopped out. Let's lower the time frame. Oh, I see. So I actually had an order that wasn't even my idea. Any order, I don't know why this is showing. I can't get rid of it somehow. Glitch in the web platform or something. I have no idea. But I did get entered into this long position here. A tiny risk. And so not a really big deal, but I did end up getting stopped out. It stopped me out on the open, actually. It hit my entry, came back up, and then you could see this. It just sliced right through that zone, that level. And what are you going to do? I was on the opening range break. I did not take an opening range breakout trade today because look at how crazy this, it's the first 15 minutes were pretty crazy. I will say though that I was looking and I was really gun shy. I really shouldn't have been, but I was really gun shy about it. I wanted to go short here because of the dying momentum. And this was a controlling pivot high from last week or a couple of weeks ago. Was it last week or 2 weeks ago? I don't know. When the NASDAQ broke above 1150 even. And I was like, okay, if it hits that point again, I want to short it. And there's a lot of consolidation here, which means that it was probably... I mean, a lot of this basing makes me nervous both ways, right? Like whether I want to it's going to pause for a little bit and then shoot up, or pause for a little bit and shoot down. You really can't tell. But when the opening range candle did this, I was like, okay, so today is going to be more than there's too many indications for this to actually start to reverse. So I want to be bearish today. So that's on that note, I actually did not take the opening range the way that I would normally might. Not that it would have mattered. I wouldn't have gotten filled anyway. But if anything, I had a sell order here, right at the 11,000 even. And as you can tell, I never got filled here. When as I saw this kind of bearish move, it's a little bit of divergence here. I figured, all right, well, if it hits, I'm going to move my entry up down to the 10,925, because at that point, I mean, that's a nice big quarter entry. Or rather, that's not a big quarter entry, but that's the boundary of a big quarter entry, which is the green lines on this chart here. So, and you can see that worked pretty much like textbook. It pretty much worked exactly as expected. I could have held, but I didn't. Here's the thing: I really only am interested in holding for that long if I can take multiple contracts and ensure a free trade. but you can tell by this one arrow here, I only took it. So I just took the a 25 tick stop or point stop up here, and I got a 4-to-1 out of this. It was a $200 trade. That's pretty much the big win, and the rest were kind of smaller wins, and that kind of negated each other, right? So because I have a $222 profit day today. I guess I could have continued to hold on. I do believe in this downtrend, but I want to see more of the RSI before I go short again, because if you look at this, we're getting some positive divergence here, and that kind of makes me a little bit nervous, right? This kind of made me a little nervous, and then same thing here. The momentum isn't quite as strong. Technically, this is in divergence, but on the bigger time frame, I don't know. I still need to see a little bit more. So moving on to the next one, I didn't take anything on the Russell. I did take something on the S&P. I got stopped out on the S&P because I actually had a long order here. So let's go down to the smaller time frame so you can actually see where I got in and where I got out. So on the S&P, I have this huge white line to indicate a big quarter, because my red lines are every dime, right? So every 3,200, 3,300. Those are not big quarters. Those are dimes, technically, right? If you were to, it's going up by hundreds, right? Big dimes, if you will, right? Big quarters are 250. Big dimes are 100, right? Small dimes are 10. If you're gonna follow along with the comparison there with the lingo. So so in order to distinguish between the dimes and the big quarter, I just put a white line there. It just defaulted to that color to really make it stand out. And you can see, like, the price is kind of attracted and wants to stick around the big quarter. I actually had a long because I thought that there was a, I don't know why I thought it. I was kind of all over the place. But I tried to take the bounce back because it was a big quarter. I assumed, a big quarter was going to be able to hold its own, and it did not. Although technically it would have, actually. If my stop was halfway, 12.5 points, I would be fine, actually. But I actually ended up taking, just messing around and taking an earlier entry, and so I got stopped out. Right? I took, instead of taking the quarter, I took it a couple of points ahead, which moves up my stop a couple of points, and I got stopped out. This is just reinforcement for me to stop doing that. Like, stop messing around, just stick with the quarters, and I would have saved myself like $60, right? I was a $60 to $50 loss, $62.50 loss right there, because it's half of 125. So we're just kind of just bouncing around here, meandering around, not knowing which way it's going to go. We'll see what the market has in store for us on the open. But right now I have two contracts. I am short. I do like the short better because of the bearishness, the RSI being below 40 multiple times. And when on its high, it can't break above 60, right, on the 15 minute. Right? On the 60 minute, which is incorporating a much bigger window of time, we're seeing that right here was a negative divergence, right? This is on the trend time frame, right? So this is negative divergence right there, right? Price is making higher highs, but the RSI is making lower highs, and you can see the rest is pretty self-explanatory. What I would like to see on the hourly time frame is this make a high but not break above 60. That would really make me a lot more confident in my position. But I jumped the gun here a little bit. Sometimes I do that, right? And we're seeing lower lows and everything. I'm slightly nervous, but I'm not that nervous. So hopefully this will work out, right? You can also see that I have 2 contracts here. I do plan on, when the market opens up again and I can enter orders, I do plan on setting up another, setting up a buy here so I can lock in a 1-to-1, enabling me to then hold this, assuming that I might take this all the way down to 200, which seems to be the big area of support, is 200, right? I don't see this crashing through the 200 unless there's some significant help from the news or from China, or like some kind of fundamental environmental factor that really gives it more momentum to go down. I don't think it'll just go down all on itself from a pure technical basis. So I'm looking at maybe completing another 1-2 quarters here, small quarters on the S&P, using a 12.5 point stop, which is half a quarter, as a risk management strategy for my break even, for my 1-to-1. I can't put that order in yet though. So moving on to the next one, the Dow. I did want to get some action in on the Dow because it moves very similar to the Nasdaq, just not nearly as much. You can. The reason I say that is, even though the Nasdaq is far stronger, the Dow is just in terms of the price itself, is a 5-figure number. The Nasdaq is also a 5-figure number, and then it has a couple of ticks, right? It has ticks that go up by quarters, right? So go up by 25, 50, 75, and 0. So it has technically even more digits, but if you ignore that for the most part, which I kind of do, I typically ignore the anything after the decimal point because I'm playing bigger stops anyway. For the Nasdaq, I can actually get away with playing the big quarters because it moves so much. The Dow, I definitely play the big quarters, even though it doesn't move quite as much or quite as fast, because each point or each percentage point requires more ticks, right? There's no decimal point here. So for those two securities, it's actually worth looking at the bigger quarters, right? In general, my philosophy is, and this is how I was trained, is trade the highest time frame that you can feel comfortable with, right? Without making you go insane, right? And the idea is to stretch that comfort zone for higher and higher time frames, so you can hold position for longer and longer. That typically trends go for a long time, and that's where the bigger money is. Not saying anything against day trading. It's just like that to me feels a lot less work over time for a comparable, like similar amount of return on a monthly, quarterly, and a yearly basis. So moving on, crude oil. I take the mini futures because I want less risk on the crude, and I actually. Here, crude was interesting because it did this giant move that I completely missed out on. I thought of it. I thought of going long here, but I didn't, and dilly-dallying around and not, and like I'll just take it the next day, see what happens the next day, made me miss out on this huge move. It's huge. This is like a $500 move, this 100-point move right here. I'm like, oh my god, I can't believe I missed it. And it's not like I didn't. And it's not like I didn't think of it either. It's like I had my eye on it, and I just plain missed it. Right? That's really all there is to it. There was many reasons to get in on this long, like at this green line here. You can see that the 889 crossover, right? The red line and the green line crossed over here. And when it crosses over again, this is kind of bringing in a little bit of Elliott waves into the mix. That's not really my strong suit, but that I know that's a reason to take to enter here. a quarter. This is just so many reasons to take a trade here that I just missed. I have no one to blame but myself. And yeah, I'm really kicking myself as a result of it because I let my previous trade bias me, right? Actually took a this move actually originated all the way from this point right here, and I let that stop me out. I took a stop. I took a short here, and I got stopped out somewhere that is not really obvious right now, but I did, right? It was definitely right around this corner, so it must have been right here. Oh, you can see that. You can see the arrow right there, right? So I got stopped out, and I think that made me a little bit biased. I should have been looking for longs, especially after I saw this strong move up, big momentum to the upside. It broke 60, and on the retrace, this is where I should have taken it, and I didn't. So I missed out on that. So what I did take was I noticed a divergence here, negative divergence, right? Momentum is dying down, but price went up. So this is a divergence right here. And again, I should see, looking at a divergence this far, right near a red line. This was asking me to take a short from here back down to the thing, but I missed it. I mean, again, this is like look at all these positions I had open. I had like maybe double the amount of these positions open, and it was just a lot to manage. And so incorporating swing trades and day trades in at the same time, it's just like a little bit of just stretching how many things I can keep track of. And I have the free version of TradingView, so I can't do alerting on indicators, although I probably should start paying for it and getting alerting on indicators, because I think it would be very helpful to if I saw this divergence, I would have loved to have taken a shot at a big quarter short here. I would have loved that, and it would have been beautiful. So what I ended up, I missed it. So what I ended up taking was a bounce back, a correction from here to hopefully up to the big quarter again. But realistically, this is a correction, not an impulse. So it's unlikely to actually get up there. In retrospect, I wanted to, I didn't take the 1-to-1. I wanted to really push it. I wanted like the 2-to-1 at least. I never got the 2-to-1. I was hoping for the 2-to-1. And I was like, screw it. I'll just take the break even, because the momentum had died. I saw that my orders are getting modified now during the rollover here. That's what this is. Don't worry about that. Once I saw this high that couldn't break above 60, I'm like, all right, momentum's dead. I'm just gonna take the break even. It was disappointing. I was very disappointed that I had the right read. I had the right read, and I'm glad. In retrospect, I am glad that I didn't take a loss, because if I just left it and I didn't manage the trade, I would have gotten stopped out, I think. Oh no, maybe not yet. I wouldn't have gotten stopped out yet. My stop would have been here. But I'd be damn close, and I would be very, very upset right now. So instead, I took a break even. Whatever. It's just I need to keep a closer eye on crude. But it's something that is very slippery. Nat gas, not as big of a moving. Not as much movement on the nat gas. Again, I take the mini, which is the QG instead of the NG, and it's just bouncing around here a lot. So I'm taking a short. This is a target from a different trade idea. A trader I follow is saying, like, once it comes down here, set up to buy and then target, and I'm definitely interested in that trade as well. But while it's up here, I want to ride the move down to his recommended entry point for a long, and So I took the entry right at this corner, this quarter. This is the green line, big quarters on the energy markets here. I want the big moves, and I'm looking for this 100-point move. I think I might have actually had multiple contracts, but I pulled one off because I was stretched so thin, right? I have here's the thing with day trading and swing trading. With swing trading, you're holding trades overnight eats up margin, and so it makes me question how it brings in a different kind of management of capital. And so I found myself kind of maxing out on margin, which isn't necessarily a bad thing, because you could be taking really, really small risk, but occupying the full required margin for one contract. So I knew my risk was very, very small, so that even if I lost every single trade that I had on there, I had my stops set to be either break even or profit for most of them, so I wasn't really worried about my management, my capital management, that much. But I did notice that I was like we just saw with crude, there was a huge move to the upside, and I missed it because I was spread out. I had my chips laid out in different areas of the field, and so to speak, and the one thing that I didn't bet on moved up like crazy. So there is a little bit of FOMO that comes into play. Definitely not happy about that. But I'm in the nat gas. I'm aiming for this this green line here. Potentially taking a long down here. Depends on the entry. Depends on what the RSI is like. If it's way below 40, then I am not going to take try and catch a falling knife necessarily. You can see some activity. This is what happens between 5 and 6 Eastern. So it's not really. Don't worry. There's no real activity. The market's still closed technically. So moving on, I did take a British pound long from another quarter, big hesitation band, the green line. The big quarter boundary from here. I actually was in trouble for a little bit, but it didn't hit my stop, and it moved me up. And I moved my stop to this small quarter below this 750. This small quarter is 25 points, or a small quarter below the big quarter. One small quarter below the big quarter, right? Hope that's not too confusing. So I got stopped out, and that happened literally right before I was about to come on live here. Part of me thinks maybe I should have moved it up to this pivot low. I don't know. We'll see what happens with that. If it breaks above the... If all this divergent stuff tends to change, and we stay above 60 on on currencies, I trade on the hourly. So if we stay above 60, I might actually take a buy at 750. We'll see. I'm gonna, because I got stopped out, I'm gonna let it play a little more before I get in. My big win, actually no, it's not my big win. I have a big soybeans trade, but that's actually not on that's also on a mini, which is this right here, I believe. Nope, that's wheat. And what happened on the wheat? I think I took a break even. Can't remember what happened on the wheat here. I think I took a break even. It doesn't look like I got stopped out, but I might have gotten stopped out as well. I'm not exactly sure. I took a lot of trades today. It was just a lot of stuff, and it was really, really back and forth. I was interested in this Canadian dollar short right here, which is also what had me. This correlates with crude oil, right? So this short right here, I wanted it but again, it was like I had stretched myself thin on margin, and I was in profit too. So I was just like, that's the dilemma. If I do I pull a profitable trade to free up margin to get in on a different trade? I don't know. I don't know. Do I need to deposit more money to be able to handle this, or is this just one of those days where there was a lot of opportunity, a lot of levels to take, and I just had to pick and choose and roll the dice with it? You know, I don't really know the answer, but that is what I'm going through right now, and that's what I want to share with everybody here. Is what I'm going through mentally and emotionally as I trade. The big win is the euro. I took I took four contracts actually, four contracts at the 14.25, and I was very very wary of the 500 because it's a big quarter. There's a lot of potential to reverse it, but it didn't. Look at how strong the RSI was. It was way above 60. It was way above 70, and it just blasted right through the big quarter. Right. So I love the RSI to measure strength in, I mean, it's literally called a relative strength indicator, right? This is a custom version of it because using RSI to indicate divergence, but the line is representing the relative strength. And to me, this was like very very bullish strength. I'm not gonna try and smack it back down. I'll just get hurt. Right? That's a good way to get hurt. I want to trade along with the bigger trend here. Even if I go to the 240 level, even that is being consistently staying above 60. So that gives me a lot of confidence in what I'm doing. I actually had some pending orders that didn't get filled because I wanted to add to this position. Just looking at, so I missed that, you know, this at 11 a.m. to be able to take another contract up here, but I pretended that I did and I moved the stop. I missed another entry up here, right? It never retraced back. I didn't enter this one. I just entered the order too late. This one I just never got filled, and then at the end of the day it went away, right? So I'm tying up margin every time I do that as well. So I don't know that. I'll have to see how this plays out. I might need to just add more money into the account if this continues to be an issue. Oh, here's the soybean trade, right? And this is I got entered here. This was over the weekend, I think, or was it yesterday? Yeah, this was yesterday. I got triggered. I got entered in. And there was a lot of bullish momentum here. So this actually had me worried quite a bit. So we entered, RSI is way above 60. I got in right here. My stop was like 904 or something like that at the time, right? So it went kind of deep into the level, not really anything to make me panic. And then the momentum died, and I liked that it came up high like this, but the RSI couldn't break a 60 again. So that made me a lot more confident, even though I was it was negative. The trade was negative. I was confident that the momentum was gonna break down, and it did. And it's just kind of, you know, chopping down slowly but surely chopping down to the area that I want, which is all the way down here. It's going to take a while to ever get there, but this is the nature of swing trading, right? If I get to my target, which is down here, let's see. This is going to be something like $1,000 move, I think. So let's entry 899. Whoops. I don't know how to count. 899, and let's see what the take profit is when it's 865. I need to take it. Okay, my computer's frozen. Okay, no, never mind. Here we go. 8.99 even to 8.65 is it's only a $340 move. That's surprising. Oh, per contract, and I have two, so it's a $680 move. Not bad. That comes from one trade, but it's gonna take several days to ever get there. And I know this video is kind of long, but there's just so many trades that I took today. It's taking a while to get through them all. So this one here, erase the lines so it's a little less noise. This one here is another trade from someone else that is just I got entered earlier today, and it's just kind of meandering about. I like the fact that there was a divergence here. I do like that, and technically I would call this another divergence here. But I might need to fudge the data a little bit to actually get the line to show. But you can see the momentum, the RSI is dying, whereas the price was going up. So this is a warning sign that price is going to fall back down, and it's not falling back down very strong, which has me worried a little bit, but not so much that I want to pull the trade. Although this is why I lost $200 yesterday, because it's same situation and I didn't pull the trade. So I learned my lesson. I'm definitely watching it now. On the higher time frame, you can see that we were very, very bearish on the hourly, right? A little bit the momentum started going up, but it broke 60. It's like flirting with 60. It's not breaking 60. So that to me gives me enough confidence that I'm going to give it a shot. But if this continues to just dance around here, all it's doing is taking away the orders that's going to make the price go my way. It's taking away sell orders, right? Eating them up. All these buyers are eating up the sell orders, and I'm losing steam, right? I'm on the seller side, not the buyer side. So I want to see this. I want to see the momentum break down, and then we'll hit my target. And that's a pretty big move, I think, because this is not a mini. This is a full-fledged regular week contract, and that is it's only a $400 move. Okay. I thought I had a $1,000 move somewhere, but I guess I didn't. I guess I'm just having trouble keeping track of everything. So today was an extra long video. It was like a double header. And I understand that, but that's how many trades I took today. It was a lot of trades, and I actually didn't even talk to you about some of the ones that I took small losses on, that chipped away at my profit, which was like 250 something, and then I got chipped away at some of these smaller losses that I took, and now those weren't even, I don't even remember them. But that's how much trading activity happened today. That's it for today's video. You can expect more kinds of stuff like this going forward. It's a very different flavor of how my previous 4 weeks of a day trade vlogging here has gone. Not as much opening breakout, not as much. I will still look at the news breakout tomorrow for crude oil at 10:30. Definitely, and I will still look at the opening range, but I am not going to automatically blindly take it as I used to do in order to practice and get a feel for it. I would take it. A lot of people would argue that you shouldn't be doing that. You shouldn't be practicing with real money. My opinion is I never want to touch simulation mode, ever. I believe that simulation mode creates more bad habits than it does get you used to how the trading platform works and whatnot. I think it's sneaky, right? Because the bad habits that form are purely mental and emotional, and they're very subconscious, and they're they're deeply seated, so it becomes that much harder to overcome. The longer you spend in simulation mode, and this is true of all those traders that I spoke to have started in simulation mode, the longer you spend in simulation mode, the harder it becomes to get to scale up and get some real money going, which is kind of the point, right? Who wants to stay in simulation mode forever, right? It's like riding a bike with training wheels and forever, right? That doesn't make any sense. So for me, I spent a month right here live with you guys practicing daily breakouts and news breakouts on the energies, right? The news, because the energy markets, the natural gas and crude oil, they have weekly news alerts that come out, right, every Wednesday and Thursday. So that's helpful, right? And I wanted to have some kind of thing to do every day, but now instead of trading with it and blindly, I am trading against it as if and looking at it as a form of defense that I need to like fake out before I continue my move, right? So I was traditionally trained on quarters, so I am going to stick with that. And right now you're seeing a little bit of a hybrid transition where there's a lot of day trades and a lot of quarters trades. Almost all my trades are taken off of a quarter, big quarter or small quarter, and you see that I'm incorporating other people's trades in on this as well because I respect them. I respect their knowledge. I respect their expertise. Everyone I follow has institutional experience. I don't follow anybody without institutional experience. It's just not, to me, it's not a good bet long term. It's not high probability long term if you don't have at least a decade or two of experience trading at the highest level, right? So unfortunately, that also means that I'm a little bit biased against people who are like young traders. If you're in your 20s, you might be a genius, but I'm not going to follow you until you are probably like 40, because I need to know that you can handle the long term, the long career, instead of making a little bit of money and then losing your discipline and switching over to something else, right? Anyway. That's it for today's video. A little bit of day trading, a little bit of swing trading, holding positions overnight, a little bit of my philosophy on how I'm going to be shifting this vlogging experience going forward. And a lot of questions I have too, like should I add more money? And a lot of things that I'm dealing with on a... I've created new problems as a result of deciding to hold positions for longer. I'm doing well, right? I'm holding a $465 profit, as you can see, right? As you can see, right? Whoop, that is black. Let's go with green for profit, right? Let's erase this, and then make this a little bit thinner. Anyway, you can see that I'm holding a $465 profit, and I've realized $222 in profit. So technically, you could say that this is a $687 in profit today. It was as high as 800, honestly. But that's not the point of this. Not really too excited about that. This is, again, I'm more about the process than I am about the money, right? Because you perfect the process, the money is an automatic byproduct. And I think that's the case in pretty much any business. And in the business of trading, it's a lot more obviously the case because you're dealing with, winning money and losing money, gaining money and losing money on a daily basis. So that wraps it up for today. Holding my positions. See you guys tomorrow for another episode of YouTube. Take care, everyone.